Gold prices took a bit of a tumble today as there was some perhaps less dovish Fed speak, which started yesterday and kind of fed a little bit into today about how aggressive the Fed may or may not cut rates in the coming weeks and months. At this point, we've seen gold rally close to $100 over the last week to the recent highs of just under $14.50. And today we saw a bit of a pullback after yesterday's modest pullback as well. And the market just seems to be finding its sea legs. We've spent so little time north of 1400 that I think if we get a trade quickly back below it, it could start to spur even more selling at this point from a technical perspective. But ultimately, with the Federal Reserve on deck to cut rates in July, possibly again in SEP and DECE, with trade issues still on the radar, continuing to beat up the dollar, these are all fueling gold prices higher. And then if you look over in the Treasury market, you see those yields continuing to remain stubbornly low. So non-yielding assets are actually starting to look much more attractive. So at this point, the vote's not in yet as to whether gold will continue its ascension that we've seen over the last month or so. I think at this point, touching those near 6-year highs, having the market have a quick pullback suggests to me that there may be some liquidation. Likewise, there could be just maybe the market got a little over its skis with how aggressive the Fed may or may not be. So at this point, I'm not waving the white flag and saying that the bullish tone is over, but it seems to me that we need another catalyst, bit of news, another event, something else to kick us up and see that 1450 level get reached and breached in the near term. And the dollar, while it's trading a bit sideways today, it continues to trade near its recent lows and continue to just get beat up. I think at this point, when you start to ask yourself about the intentions of the Fed, what's happening between Chairman Powell and President Trump, what's happening between the Chinese and the U.S. trade deals, there's a lot of uncertainty there, and the dollar right now reflecting, I think, a little bit of confidence, reflecting the possibility of more aggressive rate hikes still, despite what we heard yesterday from our friends Mr. Bullard and Mr. Powell. And I think at this point now, the dollar becomes a little bit of a temperature gauge for Fed rate cuts in the near term. Right now, the market's pricing in 25. Bullard said yesterday 50 would be too much. Didn't say 25 would be too much, but he did say 50 would be too much. And rate cuts are not dollar friendly, and that will obviously help keep gold prices buoyed higher than what we've seen in recent years. And lastly, the speculators, they've been piling in, and as of a week ago, they were at their recent high long position. But I think this quick turnaround suggests that maybe some of those speculators saw the tape, way they saw their positions shift, whatever, and they took the opportunity to sell, knowing they could probably buy it back a little bit cheaper, given the fact that we haven't spent a whole lot of time at these upper price levels, and that volatile trading would occur. So I think at this point, I'm not throwing in the towel on the bullish run. I think speculators, while they may have exited some of their position, will look to reload if we dip below 1400, especially with more rate cuts coming, especially with more issues coming with China, especially with issues in Washington. There's a lot of dollar unfriendly news, and with low yields and lack of other areas to put your money, I think gold becomes an attractive asset again, something we haven't seen in a long, long time. So right now, a bit of a pullback, but I wouldn't necessarily say the bull run is over, certainly with rate cuts on the horizon.